Welcome back. Taking a look at how the markets fared today. It was a losing day for the Dow, but your other indicators closed on a positive note. Oil jumped 6.5%. Time now for your Money Minute. Personal spending appears to be up. Americans continued to spend in July as their personal incomes also grew by an average of 0.4%, a sign the economy continues to gain momentum. Federal Reserve officials are going back and forth on whether to raise short-term interest rates. Some international officials say it's time to get on with it. Fed officials say they'll raise their interest rates. They just haven't agreed on when to do that. Oil prices continue to slump to their lowest level in 6 years. Meanwhile, producers need to find $500 billion to repay debt. Experts say the look and shape of the oil industry could fundamentally change if oil prices stay at these levels. And while we love those oil prices, it could hurt some homeowners. Residents of Wyoming, Alaska, and North Dakota may see declines in real estate value. That's because dropping oil prices may lead to job losses in drilling fields, which is a significant part of their economy.
All right, thanks a lot, Miranda. For more finance news, I'm joined now by Scott Carter. He's the CEO of Lear Capital. And Scott, it's great to have you with us.
Thanks for having me today.
It's our pleasure. Now, we've seen an incredibly bad couple of weeks here on Wall Street, or there on Wall Street, I should say. Was this all caused by global market fears, or do you see real problems baked into the economy right now that could mean some long-term woes?
You know, I see long-term issues. Certainly, the markets are like, a balloon that could just be popped with a small pin. And China kind of popped that balloon earlier in the week, and we saw a tremendous ride. You really needed your seatbelt on this week if you were in the equity markets. But I think there are longer-term problems. I think the Atlanta Fed just came out with third-quarter GDP at 1.2%. And in my view, I think we're headed toward a recession absent the Fed doing something. And that's why I think they'll hold pat on interest rates. And, I would make the argument that we might see QE4 before we see a significant rate increase by the Fed.
So you think there'll be another quantitative easing period. We are also hearing, just based on this week, that everything looked like it was going to be just fine in terms of the Fed raising interest rates, but then China went ahead and devalued the yuan, and now nobody really knows what to do. What does this all mean for folks who do invest in precious metals like gold and silver?
Well, I think it's a good time. Certainly, if you jumped into precious metals 3 years ago, you haven't had such a great ride. If you've been holding it, though, for a longer period of time, say 10 years or so, it's been a great investment. In fact, it's been a great contra investment in a portfolio. The last 3 years have been all about equities. And the question for the retail investor is, will that continue going forward? My opinion is that the market right now is priced for perfection. We've got zero interest rates. We've got assumed 3.2% GDP growth. And those things are just not going to last forever. So the equity markets are going to have to adjust. So therefore, precious metals investors that are not only currently in the market, but are considering to maybe buy precious metals for the first time, this is a great time to add it to your portfolio.
It sounds like that's the investing advice we always get, right? If you put your money someplace and you hang on to it for a long period of time, you're usually going to do pretty well. Now, when we also look at precious metals, this week in particular, gold didn't really behave like it normally does. When the stock market tanked, a lot of folks in the past would put their money into an asset like gold because it's normally considered a safe haven. But this time around, folks went to things like government bonds. What is going on with gold now? Why are we seeing some unusual behavior from investors?
Right. Well, you mentioned that, but if you think back to 2008, when the stock market tanked in '08, gold went down as well. Gold was at 1,000 and it dropped 30%. It dropped back down to 700. Then as the stock market and the recession kicked in and we started to see some of the more systemic problems, and then we saw the devaluation of the dollar, basically the quantitative easing, then the true price of gold came out again. So it doesn't surprise me when there's fear and volatility that everything is sold and investors move to dollars and bonds. But then as the dust settles and they start to look at the long-term investment portfolio or the long-term horizon, gold and silver tend to shine because fear's in the market. There wants to be a balance, if you will, of a portfolio. And if certainly the Fed or the government jumps in to improve through quantitative easing or interest rate reductions, then gold and silver do well. So that's why now, like in 2008, it could be a great time to get in. before we start seeing some of these potential problems in our economy materialize.
Yeah, it never hurts to kind of balance things out, because right now there are so many divergent indicators with what's going to happen with the economy. Who really knows what's going to take place? Scott Carter from Lear Capital, thanks so much for being with us. Great to talk to you, sir, and we hope to have you back real soon in the near future.
Thanks for having me.
Our pleasure. So you never really know what's going to happen with those markets. Pretty rough week this week. Next up, the intersection of news and comedy. Headlines and punchlines is coming up right after this.